We have had a lot of breaking news in the uranium market. Billionaire Eric Sprott, one of the most successful gold, silver, natural resource, and commodity investors in the world, his company now getting involved in the uranium market in a major way that can really shape it in unimaginable ways with the investment potential that's now here in real time. And we discussed this last time with Justin from Uranium Insider. We're going to be digging deeper into what's happening. Did I miss it yet? How big can this thing go? And what are the real ramifications of Sprott getting involved in the market? How this is going to affect supply, demand, and what happens to the stocks. Now, Justin runs Uranium Insider. It's the best uranium newsletter on the entire internet. I'm a paying member to it. He breaks down everything that's happening in uranium, the mining stocks, the best ways to profit from this truly historic opportunity that really only comes around every 15 or 20 years, and probably more bullish than ever before. So Uranium Insider is right there down below. I encourage you to sign up to that. I am a paying member myself. It's pinned to the comments and it's in the description right there down below. And everyone comment down below. Go, uranium, go. We did that last time, and I think it was good luck because we're starting to get good luck when that's happening, Justin. So comment down below. Go, uranium, go. Make sure you hit the like button on this video. Share this with everybody in the uranium community. It's just getting started. So what's up, Justin?
Doing well, Jake. Yeah, pretty excited about all this stuff. It's getting hard to keep track of all of the positive fundamentals that are just stacking on top of each other.
Yeah,
It's really unbelievable.
it really is unbelievable. And I want to read a comment that somebody left on the last video. You know me, I like to get excited about things, and you're kind of the opposite. You're very level headed, and you're very you don't get quite as excitable as I do about what's happening. And somebody commented and they said, "Wow, Justin is usually pretty level, never speaks with too much enthusiasm. He certainly did at least twice in this interview. Very cool, well done." And so I want you to elaborate on what's really getting you excited. This Eric Sprott, the billionaire legendary investor, getting involved. What does this mean? What are the ramifications? Why is this so exciting?
Sure. I think we talked a bit about this in the previous interview, just with this development. But for anybody who didn't see that, essentially what's happening is Sprott Resource Management is taking over the management of Uranium Participation Corporation. It's a physical uranium fund. Their whole stated purpose is to hold pounds of uranium, and the stock trades on the public markets. And when the stock trades at a premium to NAV, their net asset value, or the total value at the current spot price of the physical pounds they hold, when the stock trades at a premium to NAV, they issue shares, they raise money, and they buy more uranium. And that's the whole purpose of this fund. And conversely, when it's at a discount to NAV, they in theory can sell some pounds to raise money to buy back shares. That's happened very little. They've accumulated way more than they've sold. And the whole purpose of the fund is to grow the assets under management of the fund. Well, this year we've seen all of these raises. We've seen all the raises from the miners, from even non-producing miners that have purchased physical uranium on the spot market. Denison, from Uranium Royalty Company, from UEC, from Encore Energy, Boss. I believe Peninsula did a raise recently to do that. I'm probably missing a couple. We also saw Yellowcake execute their 2021 option to buy $100 million worth of uranium from Kazatomprom. There's a new detail on that just this morning that I'll talk about in a bit. But UPC has yet to raise. As of the Sprott announcement, since the Sprott announcement, they have raised, and they are going to be purchasing some uranium on the spot market. So, but everybody was kind of scratching their heads. What the heck? All of these entities are coming out of the woodwork buying uranium. This is all new. This hasn't really happened before, besides the producing companies such as Cameco and a little bit from Kazatomprom buying uranium to fulfill their contract, their long-term contract book, these delivery obligations that they have. And Cameco having shut down McArthur River, having temporarily closed Cigar Lake, which is attempting to come back online currently, would buy in the spot market to fulfill those contracts. That's been happening since 2018 when they closed McArthur River. So it's been a bit of a head scratcher why UPC didn't jump on the train, especially they were trading at a 24% premium to NAV in February, which is huge. And they absolutely should have done it. But, lo and behold, they were working on the Sprott deal. So understood, and all is forgiven. So essentially, the kind of new color that's coming to me with this deal is it has more to do with the bid that's going to be in the market. And I actually have a slideshow to share with you. I can bring it up in a little bit, but there's a bit more detail on that. So the spot market purchases and trades qualify as spot market purchases for delivery up to 12 months from the current date. And so, for example, the Denison acquisition of 2.5 million pounds, they raised $75 million to do it. That happened over 17 different transactions and from 12 different sellers with delivery out beyond 6 months from the transactions. But it still qualified as spot market, even though you have delivery out into the future. So it wasn't really a mechanism to force like true price discovery of what is currently available and at what price. We still have really yet to see anybody push that. Besides, I would say, when Cameco closed Cigar last year, when COVID was coming along, that was in March of last year, they hit the spot market pretty hard for sooner delivery. They were forcing delivery in less than 2 months. And we saw what that did to the spot market, right? We saw it go from the high 20s up to almost $35 in the course of 2 months. That was because they were forcing fast delivery. They needed X amount of pounds. In that case, it was, let's say, probably 5, 6, 7 million pounds. And they forced delivery in less than a couple of months. The spot market responded. The price responded, most importantly. So now what we're seeing is Sprott come into the market. They are going to have a New York Stock Exchange listing. They are going to have an ATM financing vehicle, which means they will be able to access funds at any time to purchase physical uranium. And so what we're going to see is funds flowing into the stock, flowing into this vehicle, Sprott issuing shares in the ATM continuously, raising money at will with a constant bid in the spot market for what's referred to as front month delivery. They will most likely be requiring delivery within 30 days, possibly within 60 days. But we believe it's going to be within 30 days. This has never happened in the uranium market. This is brand new, and we don't know exactly how it's going to go. We do know it will be forcing the price up because we've never had a vehicle forcing potentially 1, 2, 3 million pounds per month in a front month bid at the spot market. So let's say they raise $10 million in the ATM. They're trading at a few percent premium to NAV, and they come in to buy $10 million of uranium with 30-day delivery. What if that's not there? What if they can only get half? What happens? That bid stays constant, and the bid is raised until that uranium comes from where it comes from at the price that it's needed to deliver upon. So that's at least how we believe it's going to play out. We do know that they will be forcing sooner delivery than a typical spot market transaction that can be 3, 6, 9, 12 months from the date of the transaction. It's a big deal, and I don't think it's out of the realm of possibility to see prices in the 40s by the end of the year. And I think that there's going to be an unbelievable amount of money flowing into this sector, and a lot of it's going to be flowing into that vehicle because of the direct relationship it's going to have in directly moving the spot price. And the interesting thing is that it's going to have unbelievable liquidity on the New York Stock Exchange. It's going to have a large market cap. It's going to be the choice entity for institutional funds to flow into. Therefore, if you were an institution, what would you be doing? You would be positioning in some of the equities that are going to indirectly benefit from the spot market moving. You can just secure those positions. Typically, the mining stocks will have greater alpha than the actual physical funds. So If you're buying the physical funds, it's a safer play, but let's say, they're priced at this $32 uranium that we're sitting at right now. So if uranium goes to 60, goes to 90, you get a double, you get a triple. If it goes higher, you get a quadruple. Fantastic. It's safe, it's highly liquid, perfectly fine for exposure to this market. But the miners always have increased alpha to any sector, to gold, to silver, especially in the mining sector. And so we believe that these institutions are and will be positioning in the equities, and have been actually, especially if we look at the ETF flows, which I'll show you in the slideshow in a bit, prior to either purchasing physical funds themselves, hedge fund purchases, which happened in the previous market, or plowing into this new equity with great liquidity. It's safe, and it's going to directly move the spot price, which is going to bring up all of their other holdings. It's an unbelievable development. I mean, I was speechlessly bullish in our last interview, but now my better understanding of the implications of what this is going to do to the spot market has me more confident than ever in the trade.
Well, yeah, powerful. So, I mean, for everyone listening, this is why I suggest you sign up to Uranium Insider. It's why I'm a paying member. I mean, I really believe this. I mean, it's incredible. I really didn't think before about the ramifications of short-term delivery. And like you said, what if it's not there? I mean, we know it's not there. We already know it. So then what happens? I mean, what happens if they try to bid for a supply that doesn't exist and they want it in 30 or 60 days, but everyone says it's going to take 6 months? So I want to dive in a little bit deeper into that. And first, I want to say, uranium's an obscure kind of investment. And so, whenever I talk uranium, I'll have people that'll be like, "Oh, they're shilling uranium," and it's so bizarre because this is one of the most undervalued investments in the world today, and one of the most important for the future, with carbon neutral energy source and reliable power. And then the development with Sprott, how cheap these are, the fact that there isn't supply. I mean, I feel like I'm doing a disservice not talking about this because it's so incredibly bullish. And so I want you to dive a little bit more into those bullish factors, because some people will say, oh, they're shilling this thing that already happened. So did somebody miss the market? I mean, you understand my 2 cents about the excitement of it, but fill me in here for someone that's new to the uranium, or maybe there's a lot of stories about uranium and the Russians control it all and there's so much supply, the price will never go up. And this big run already happened. The stock's already went up 200%. So did I miss it? Give me the breakdown on it, and why someone should still be paying attention to uranium right now and positioning themselves accordingly.
Sure. Yeah, absolutely. Okay. So a 10-year bear market doesn't turn around with a bull market of less than a year. We are so far from this being over. The fundamental thesis has, if we had had a conversation in November and said, Jake, let's line out a blue sky potential for this sector. What could we wish for that would line this up? Okay, how about regardless of the US presidential election outcome, whoever's in there, they're going to be supportive of nuclear energy. Okay, the Democrats are in. They're supporting nuclear energy. Would you have bet on that 12 months ago? No. Let's say the entities that are buying physical uranium in the market, these funds, what if Sprott was managing one of those? Can you imagine that? Look at what they've done to the gold and silver, platinum, palladium funds. Look at those trusts. What are they, $8 billion assets under management? That's a third of the market cap of uranium right now, of the whole sector. Imagine Sprott running one of these funds.
Let me add one more here. Imagine the silver squeeze applied to uranium that was done specifically by Sprott on a market that has even less supply. Imagine if that happened, Justin.
Yeah, and retail can influence it by buying the equity. Imagine ESG embracing nuclear, this energy source that has been maligned for 2 decades, primarily by the oil and gas lobby. as a dirty source of energy, as something to be feared, being embraced by an increasing number of environmentalists and the ESG sector just coming after energy and enforcing something that Cameco is calling electron accountability, where companies are actually going to be accountable for the source of the energy that they are buying to run their corporate their projects. It's just insane. Okay, so first, no, nobody has missed this run. Is this a contrarian bet anymore? No, it's not contrarian. The only way I would say it's contrarian is that your barber doesn't know about it yet. The taxi driver doesn't know about it yet. And the people that are telling you to buy Dogecoin are not yet telling you to buy uranium. Okay? So it's contrarian in that everybody isn't buying this, but the smart money is, the light bulb has gone on for the smart money. It's turned on. Can I share my screen?
Please.
I want to show you a couple of slides to kind of belabor these points, if that's okay.
Justin, while you're pulling this up, here's another quote I want to read to you right now, and for everyone that can hear it while I'm talking. And this other quote that I pulled off of a comment says, this is from someone named Rob, and they said, "I would say the spot market will become the sprott market."
Yeah, I've heard a few people say that. It's appropriate. I mean, they're going to control it. It's in their hands. And I mean, to the point, to the example that I brought up of potentially not enough uranium being available for 30-day delivery for what they're choosing to purchase, there are consistent players that sell into the spot market. It's not like there's this static amount, and once it's gone, it's gone. So I don't want people to get that impression. We have the Uzbekistan miners that sell into the spot market. They also have offtakes to some Japanese trading companies that sell into the spot market. We have Orano sells into the spot market a little bit, Uranium One a little bit, BHP, their Olympic Dam project in Australia. Uranium is essentially a byproduct of gold and silver production. They sell into the spot market, 6 or 8 million pounds a year. Some of their stuff is on contract, but most of it goes into spot. So we do have this 15 million pounds a year, let's say, going into the spot market. There's probably some secondary supply, spot EUP, that comes from the enrichers, but that's basically been chopped in half in the last 24 months, gone from 24 million pounds a year to under 10 million pounds a year coming from secondary supply from underfeeding. So there's not a lot of secondary supply coming to the spot market. So all we need really is a consistent demand that breaches that consistent supply, that's going to force pounds, out of the woodwork at higher prices for people that aren't voluntarily selling at these prices. Will more uranium come into the spot market at higher prices? Of course it will. But the higher prices are going to bring it into market. Those higher prices move our investments. That's the whole idea. So demand breaching supply, that's essentially what we have, what we will have shortly in the spot market, what we do have in the long-term thesis for the term market. So we kind of have both things going for us right now. The term market is still pretty slow. There's not a lot happening there.
So what do we have here?
What we have here is, this is the URA ETF showing, the past 10-year history of the ETF. Now, conversely, you'll see stock charts. Like if you look at a stock chart, let's say for Energy Fuels, for example, they've issued so many shares, and I think they even did a reverse split. So if you see the chart that says it's going from X and it has the potential to go all the way back to this, no, it doesn't. There's way more shares out, and they've done a reverse split. So in order for a mining company that's issued millions, maybe billions of shares in the past 10 years to reach the value it was before, the market cap would have to be way higher in order for it to get there. So, Energy Fuels, amongst all the other companies, are going to do well. That's not what I'm saying. But what I'm saying here with this ETF is that this chart actually represents the potential for the stock to reach those levels again, which is what, $130 back in 2010. I don't have the chart in front of me, but I'm sure it was even higher in 2007. This is showing this the last little blip prior to Fukushima. So look at that chart and ask yourself if you're too late. You're not too late. It's just gotten up off the mat in the past 12 months. This is the beginning of a new bull market.
It's amazing to look at that too, because I read those comments. They're like, it's such an obscure market that it's such an incredible opportunity right in front of your face. Maybe that hasn't happened in 10 or 20 years. And I'm not just talking about in the uranium, I'm talking about an investing period. I mean, when has something had this much potential? And it's so square and obvious that it's easy to overlook it, but once you look at that and you go, well, if it's at, what is that, it's at about $23 and that went well above 120. I mean, what does this do then to small cap or to juniors that you might be holding, right? And this is why we're talking about, and I say, like, please go to the link and at least check out Uranium Insider. I'm a paying member. I believe in this potential that we're seeing. I mean, there's nothing to believe in, I guess. You're looking directly at a chart that's showing you. So what's the ramifications of this on the small equities, Justin? And how has your view changed now that Sprott's been involved?
My view has changed in a couple of ways since Sprott's been involved. First, I think that this market is going to move faster and higher than I thought before. Prior to the Sprott development and some other developments in the past 6 months, it was primarily a deep research into the macro thesis for the mid to long term. And getting that right was primary importance. And now what we have with the setup with Sprott in the spot market and knowing how the spot market moves the equities, I think that we're far more likely to see a price spike scenario rather than a slow grinding bull market, which is not as good for the actual mining companies, because sometimes it can be a flash in the pan. It can happen faster, to the point where they can't even capitalize on those higher prices, get projects underway. But it's certainly better for investors, especially investors that are speculating and are quick on their toes. So I think that we see the price move sooner rather than later, and I think that we see a price spike. And I do think that this is probably still a 2 to 4 year investment. But the interesting thing with that said is that the long-term setup and the fundamental support of this thesis is just so good. It's so good. I mean, the ESG situation and the growing support for nuclear and clean energy, and to hear countries around the world pounding the table on the importance of carbon emissions, of curbing the quote unquote climate emergency, and the importance of having clean energy. I don't think that narrative is going away anytime soon. And nuclear is the answer to that. It is the answer. There's no other energy source that's like it, that can be carbon emission free and baseload, besides hydroelectricity. But most of the rivers with that potential are already dammed, and that's not something, in my opinion, it's not really a feel-good energy source. It's not ecologically sound energy source. And sure, nuclear creates waste. That waste is highly controlled, highly regulated. It's the safest source of energy in terms of lives lost per kilowatt, out of all energy sources in the history of energy generation. And so I think that was a long answer, but I think we see a price spike. I think it's a faster moving market, but the potential for it to go longer, which is not something we can really predict, but the thesis supports it and the fundamentals support it.
Amen. So show me what else you got.
Okay. And the first part of your question was, what's the implications of this chart that's in front of us now? Well, if we were to see the volume, which I'll show you a chart of URNM, the other primary uranium ETF, in just a moment here, you'll see the volume. And what that means is the volume comes into these ETFs and they become indiscriminate buyers. So they just buy the ask of the stock of their underlying holdings just at the market price. So it's a consistent bid in all of the mining stocks. And that's exactly what we're seeing now, because besides all the fundamental news on the back end and the spot price trickling up, we have kind of a topping looking at, broad market. But all of these miners, all these mid-cap miners, just have this constant bid, this constant nibbling away at the ask. And that's happening from the passive money that's coming into these ETFs. By the way, I want to give credit here to Nautilus Internet Research. They're a very well-respected analyst for this chart.
Awesome.
Um, so this is, I'm just going to throw this in here quickly. So, because this was just announced yesterday, I believe. Yellowcake that already executed their 2021 option to purchase $100 million of uranium from Kazatomprom. During that raise, they actually upsized the raise and purchased a bit in the spot market. I believe they've already made that purchase. They're now seeking to raise another $100 million prior to their AGM, their annual general meeting, to get approval to do this so that they can buy from the spot market. They've already used up their Kazatomprom option. So they want to raise 100 million to buy from the spot market. And if we look at this sentence here, I highlighted, to the extent that opportunities arise to source additional uranium that are value accretive ahead of expected further spot market tightening, the directors believe it'd be in the best interest of the company to continue with further uranium market purchases. So Yellowcake, they see the writing on the wall. They know the spot market's going to tighten. This is their opportunity to raise money right now and buy what they can before Sprott comes in.
So that's what they're saying here. Quote, ahead of expected further spot market tightening. So everyone's realizing they got to get in the game before Sprott gets this New York Stock Exchange listing and hits the ground running. And that's basically what's starting to happen.
Yes. And here, and this is this.
It's incredible.
I know. This screenshot is from their news release. And this is from a tweet from John Quakes at Quakes99. You can see his classic.
John Quakes.
Yeah, he's amazing for macro news. If anyone is actually watching this video that doesn't follow him on Twitter, do it. He's really great for breaking news. Okay, so I just threw that in there to kind of add to this whole mix.
And you're saying that will be before their meeting on, they want to do this before their meeting in September because they want to do this quickly because by September, we should have Sprott in full action. So that's what they're saying, right?
Correct. They're seeking shareholder approval through a general meeting that they're pushing forward prior to their annual meeting that happens in September.
Understood.
They want it to happen sooner.
Understood.
Okay, so this is URNM. This is a pure play ETF, uranium ETF. URA, the chart I showed 2 slides back, is 75% or 70%, excuse me, allocated to uranium. It's possible that URA might go back to 100% uranium. They're about to be lapped by URNM in terms of market cap.
It's performed so well too that just it's been amazing.
Right. So you can see they IPO'd in January of last year at $3 million, and now they've got 360 million assets under management. They 120x their assets under management, and most of that is fund flow. Some of that is from the accretive nature of the stock, but most of it is the flow of funds, and you can see the volume bars on the bottom. Again, same thing as URA, and these guys hold a bit more of the junior companies. Somebody buys this stock, they go ahead, they turn that money right around, they buy the underlying holdings.
So who's this volume from? Is this big money volume that you made a point to?
I believe so, yes. I mean, some of it's certainly retail, but it's has better liquidity than most of the mining stocks. So, and it's a safer play. And some of these institutional funds, you can only buy either the very largest caps in the sector or the ETFs for liquidity and for just a safer investment.
Got it.
Yeah, they can't come in and buy the $50 million, $30 million junior companies and own 20% of the company with a single purchase. They'll buy the ETFs.
Right. Understood.
Yeah. So this is again to kind of point out how small this market still is. So this is total money flow. This comes from Grant Chalmers on Twitter. He has these really brilliant graphs that he makes, and I highly recommend following him as well. So this is just kind of really quick to give you some perspective on the money flow for, you can see gold and copper up at the top there, base metals and rare earths. You've got 3 to 4x of uranium, even silver, quite a bit more than uranium there. So you can see, boop, it's just barely getting up off the mat there. And when we see increased money continue to move into uranium, it's just such a small sector. What does Rick Rule say? It's like the Hoover Dam going through a straw.
I think that's a Doug Casey quote. And he says, when money goes into the uranium market, it's like, I think he says it's like trying to get the contents of Hoover Dam sucking through a straw or something like that.
There's just not enough things to buy in this market. And the market is still so small. It's still 26 billion total market capitalization for this sector. Uranium is it's starting to go a bit mainstream. We just saw yesterday that Barclays is covering uranium. Barclays is a huge multinational, massive bank that's been around forever, and they are starting to catch wind of the uranium thesis and nuclear energy in general. This is from Bloomberg TV, highlighting the horizons, the URNM. Or no, this is, I'm sorry, HURA. This is the Canadian ETF for uranium. So smart money is starting to catch wind of this, and we're going to increasingly see that. This is just a quick note on the increasing acceptance of the SMRs and the small modular reactors and the advanced nuclear that's being pushed pretty consistently in the United States. So Senator Barrasso and a number of other government officials in Wyoming are coming out saying they're going to start setting these SMRs up. They've already worked out a deal with NuScale and TerraPower. No, I'm sorry, it wasn't NuScale, TerraPower, which is Bill Gates' SMR project, that they're going to set these up at retired coal plants. And I think that's such a fantastic fit for small modular nuclear reactors to tie into an existing grid where a coal plant is being retired. And Wyoming is saying, we're going to be the first to do it. We're forging ahead with this. Again, I don't see this moving the needle with actual demand for uranium in this cycle, but it does add to the underlying fundamentals. And the supply demand modeling is not expecting any demand from SMR. So to the extent that maybe one comes online during this cycle and creates some demand, we have only upside from that.
Understood. What else you got?
So this is kind of the last couple of slides. I'll just touch on this really quickly. I mentioned that electron accountability, and this is part of this is this underlying ESG movement, which is environmental, social, and governance, and it's sort of a way to grade companies for investability when it comes to some sort of social, environmental, or governance accountability for those investable funds.
It's a social credit score for companies being green, right?
In a way, it is, yeah. This is a big story, and it's going to continue to evolve. So I won't get too deep into this now, but this is coming from, this graph is from Deutsche Bank, and it's showing the total assets under management invested in ESG mandates and what they expect it to be. So 2020, we're at about 40 trillion in USD trillions, and we're seeing out even by 2024, that's expected to be 75 trillion. It's close to doubling. So to the extent that uranium and nuclear gets a tiny slice of this multi-trillion-dollar pie, that's just more funds that go not blindly, but when an ESG fund has to allocate into a sector that fits their bill, they're not trying to bottom tick and do intraday swing trading. They come in and they plow into these ETFs, and those ETFs just buy the underlying. It's just more passive investing that's going to be spurred by this ESG movement. So that's a really big story. That, like I said, is going to continue to evolve.
How would we know that's happening? Just not until it happens? Or is there a formal announcement for ESG going into it? Or is it just that you notice more institution money coming in, or what?
You can actually go and look at the 13F filings for funds and ESG funds and see what they're buying. We're looking at that now to see if they're already starting to position in these equities, but I believe it is happening to some extent, and it will be happening increasingly as this story gains steam.
Got it.
And nuclear is under review for ESG approval, let's call it, in the European Union currently, and it's certainly moving in that direction for the States as well.
Look, in our culture, we do whatever Bill Gates says. So if Bill Gates says, we're going to make it happen. So what's this quote by Tim right here?
Yeah, so this is, I can't see my mouse to minimize my the Zoom thing, and I can't read the whole quote there, but you can see it. He's basically, the last 2 or 3 conference calls, he's been pounding the table on the ESG story. They really, Cameco really wants to appeal to the ESG funds. He can see where the puck is going in this. And so he's just essentially talking about companies seeking net zero carbon targets and how individual companies will end up being accountable for the electricity that they're buying for their process. And he coined that term, I believe, electron accountability. And the final, quote there, when you look at levelized cost of nuclear compared to other low carbon sources, nuclear energy is that solution. That's what I was mentioning a minute ago. It really does fit the bill. This is not something that we're trying to collectively sell on the populace. It actually is what is needed for the rhetoric that's coming around the ESG low carbon push. It does fit the bill. And so it's something that we can actually get behind and feel good about supporting.
So is that your last slide there?
One more. But we already talked about this. Yeah. So
can I do this in a dramatic voice? Sprott acquires physical uranium fund as uranium bear market ends.
Well done. Yeah, it's just that consistent front month bid that's going to be coming into the spot market, like I mentioned, that really is going to move the needle here.
So as we kind of wrap up here, tell me in a nutshell what Uranium Insider is about. We made a pretty compelling case. I've said I'm a paying member to Uranium Insider. The link's right there down below and in the comments. Why should someone check it out right now?
Uranium Insiders is all about uranium. We're 100% focused on uranium. So we keep track of all of these movements, some of which I mentioned today, and we keep subscribers up to date on this very complex, very fast moving sector. That's primarily what we're about. Secondarily, or I guess you could also say primarily, we're about alpha. We want to find the plays in the space and give those to our members that will produce alpha. We want to beat the market. That's what we want to do. That's what we've done really well so far. To date, from 2 years ago almost, it was August of 2019 when we started, our portfolio of 10 uranium stocks is up 375%. I don't have the data right in front of me, but URA, I believe, is up about 110%. So you can buy the ETFs and get a fantastic, safe, highly liquid double where you can create your own ETF and be up 5x in 2 years. And we are at the beginning of this market. And so that's what we do. We focus on uranium. We hold your hand through this complex market via very in-depth macro research that we provide newsletters every month on. And the bulletins we send out are typically on either breaking news on a company or the sector that's timely or buy and sell orders. And so we do our best to provide alpha, and we've done a pretty good job of that so far.
Let's put it this way. They don't call him Uranium Insider for nothing. So for everyone listening, please make sure you hit the like button on this video to send it out into the YouTube universe. Share this on social media, text, email, Twitter, whatnot. I really think this is one of those rare opportunities where we have an opportunity to actually get ahead of the big money. And one of the reasons for that is, as you said, also a lot of the big money can't invest in some of these stocks due to the size of them. And that presents an incredible opportunity for us. So to recap, one of the quotes that I really liked from the last comment, the spot market will become the Sprott market. So what's next now in what's going to now become formally known as the uranium Sprott market?
Well, what's next, I think, is what's happening right now. So we're starting to see the spot market tick up. We're starting to see it rise up 25, 50 cents, 75 cents per day. It's been moving the past couple of weeks. We're seeing traders and we're seeing companies and we're seeing Yellow Cake, the physical fund. They're front running. And so we're in this really beautiful moment in time in which we can see what is coming and it isn't there yet. Sprott is not there yet. And it's going to be a couple of months. They're going to get their deal done in the next couple of months. That'll be announced. I think it'll take a couple of more months, perhaps, until they get that New York Stock Exchange listing and the ATM set up. So we have this interesting window, and you can see, I mean, the volumes are coming into the ETFs right now. There's still more smart money positioning, and it's giving, that's why these underlying stocks have such a consistent little bid and they're holding up really well. Some of them are technically overbought, and it's like, would I go all in right this moment? I would probably stage in. I would not want to be without a seat at the table, but I probably would tranche in. That's what we recommend to our subs, to enter in tranches. But I don't think we're going to see a violent pullback on this thing unless there's a broad market sell-off, and which is going to happen at some point, I believe. But how much higher are we going to be between now and then? Who knows? Who
And
knows
how
how much?
quickly can it move, right? Because that's the other thing that I really saw in April, November, as having just becoming a uranium investor for the first time in 2020 was, I heard the stories of how quickly it moves, but then you saw some of these stocks go up 200%. And I mean, I feel like some of them went up 100% in like 8 trading days, and that's the incredible thing, right? And I'm wondering, do you think there's going to be another run? And is there going to be an in anticipation run up in the equities before Sprott even fully gets, their seat at the table? Is there going to be an anticipation run of people expecting it?
I think so, but I don't think it's going to be. It's not going to be a rip your face off run. I think
Mhm.
it's going to be what we're seeing now, just like this kind of chugging along, stair stepping up, where these stocks are overbought. They should be correcting more here. We should see another visit to the 50-day at least, if not, the 200-day or the 100-day even. So I think that there's going to be consistent support, and a lot of that's coming from the passive money from the ETFs prior to Sprott. But to answer your question, it can move really fast. And the move that we've seen since December, that's a money flow story. That's not a spot market driven story. And if you go back, I wish I had that chart on that slideshow. I had it in front of me of the spot market movement in price in relation to the uh, the to UPC coming into existence. So you can see this point of Uranium Participation Corp coming into in existence. I think it was, 2005, 2006. Sorry, I don't have that right off the top of my head. And the move just goes. I mean, we were seeing spot market move $1 a day, $2 a day, $5 a week, and it just did that week over week for a year and a half. And when that happens, that's when the real fireworks start in the equities. And so now what we're seeing is more money, smart money. The contrarians were already in December. The smart money recognizing the opportunity has been coming in the last 6 months, and it's a money flow story. Now we're starting to see the very beginnings of it becoming a spot market price driven story. And that's just now starting. We're seeing it slowly tick up. In my opinion, there's a lot of opportunity to still get in now. And I think that people should be positioned, or at least mostly positioned, before Sprott starts purchasing. Because when that happens is when we're going to see that consistent front month bid. And I don't think that spot market is going to, it's not going to lag any longer once that happens. Let's just say that.
So you heard it here. I hope you enjoyed today's episode. Thank you for listening. Give us a comment down below that says "Go Uranium Go." If enough people comment, it will move the spot price higher. Go Uranium Go. Make sure you hit the like button on this video on either side you find it to send this out into the YouTube world so more people see it. Last but not least, if you haven't yet, be sure to sign up for Uranium Insider. The link, as I've mentioned, is going to be pinned to the comments and in the description right there down below. Any final words, Justin?
I think I covered it pretty well. Yeah, I would say now is just that opportunity to get in before Sprott and to join the smart money. That's the opportunity that presents itself right now. And the underlying fundamentals are just so good, and it's something that you can actually feel good about investing in. So very unique setup here. And you have the opportunity to be joined by people such as Sprott, such as Larry McDonald of Bear Trap, such as Hugh Hendry, such as Barclays. I mean, these big names are recognizing this as well. So it's not just a contrarian fringe thing any longer. And we still only at 26, 27 billion total market cap. It's a small market still. and it's going way higher. How high? I don't know, but higher, 100%.
Okay, so for everyone listening, be sure to check out Uranium Insider. Thank you for watching this video, and we will see you for our next update.